Welcome to the Leaders Insights podcast. Today's episode, Earnings Call Guidance Strategy, the CFO Playbook for IPO Readiness. Most CFOs treat guidance like a hostage negotiation with Wall Street. You think that's exactly backwards. Why?
Because the consensus says, sandbag your first number, beat it, look like a hero. That's how you build a reputation as a company that can't forecast its own business. Beating by 15% isn't a flex. It's a confession that you had no idea what was going to happen.
Come on, every newly public company lowballs the first quarter. It works.
It works once. Then you've anchored analysts to a number that's a fantasy, and now you have to grow off the real base while pretending the fake one was always the plan. Look at what happened to a lot of the 2021 software IPOs. They beat and raised, and the second the macro turned, they missed by a hair, and the stock got cut in half. The market doesn't punish the miss. It punishes the surprise.
So what's the actual failure mode?
Precision theater. New CFOs give guidance to the single dollar. Revenue of $412.6 million is like they've got a crystal ball. Then reality lands at $408, and the narrative becomes they missed. Give a range, a real one. If your range is 1% wide, you're not forecasting, you're bluffing.
How wide is honest then?
For a company doing a few $100 million in revenue in its first public year, 3 to 5% on the top line is defensible. Klaviyo, when they went public in 2023, email and marketing software, guided conservatively, but the range was credible, and they built trust quarter by quarter. Compare that to companies that guide to a point and spend every call explaining variance. One of those is a management team. The other is a weather forecaster who insists it'll rain at 3:47 p.m.
Let's talk about the things CFOs are terrified of. Annual versus quarterly guidance. Which do you give?
Give annual. Fight to avoid quarterly if you can. Quarterly guidance turns your management team into slaves to a 90-day cycle. The deferred revenue, the deals that slip from March to April. And it teaches investors to obsess over noise. Amazon barely gives guidance, and it's worth $2 trillion. Now, you're not Amazon on day one, so you'll probably concede annual with directional color on the next quarter. But every additional metric you guide is a new stick someone will beat you with.
You're basically telling CFOs to give investors less. That sounds like a great way to get your stock ignored.
No, I'm telling them to guide fewer things and explain them better. There's a difference between transparency and volume. If you guide revenue, operating margin, and free cash flow, the cash left after you've paid for everything to keep the lights on and grow, that's plenty. Guide 15 metrics, and you've just signed up to explain 14 misses on a bad day.
What's the quick win for a CFO with an IPO 6 months out?
Run mock earnings calls now. Actual dress rehearsals. Someone plays the skeptical analyst from a firm like Morgan Stanley. Someone throws you the ugly question about the customer concentration you don't want to discuss. Do it 3 times before you ever face a real one. Most CFOs practice the deck and freeze on the Q-onda, which is the only part investors remember.
And the metric everyone fudges going in?
Net revenue retention. How much more existing customers spend with you year over year? Vendors love quoting a shiny 130% because it makes growth look effortless. But the definition drifts. Companies quietly change how they count it between the S-1 filing and the first earnings call, and analysts notice. Pick your definition before the roadshow and never touch it again. Consistency is worth more than the number itself.
One thing a CFO should do this week?
Write down the guidance philosophy in one page. What you'll guide, the width of your ranges, and what you'll never comment on. And get the CEO to sign it before the bankers get a vote. Because once the roadshow starts, everyone's optimism will try to talk you out of it. And a signed page doesn't flinch.
That's a wrap. Fresh CFO briefings drop daily at mba-training.com.